Hi everyone, the GFTN just released the most comprehensive digital asset report of 2025, and what I'm about to share with you today is going to change the way you look at crypto, stablecoins, and the entire blockchain revolution. We're talking $263 trillion in stablecoin transactions, $4 trillion crypto market, and regulatory frameworks that are finally bringing clarity to this space. In the next few minutes, I'm breaking down all 8 critical areas that have been highlighted by GFTN in their recently published Global Digital Assets Report. Comprises on policy evolution, market developments, and future pathways. So let's dive. First up, stablecoins. These digital assets are quietly but powerfully taking over the space. Here are the numbers that show just how big stablecoins are. $263.4 trillion processed since 2019, with $40.5 trillion of that in the last 12 months alone. And that's just the beginning. Stablecoins market cap jumped from $208 billion to $283 billion in just 8 months, a 36% increase. That's huge. Tether leads the charge with $168 billion and USDC is at $72 billion. But here's where it gets exciting. The US Genius Act has officially passed into law, creating the first federal framework for payment stablecoins with strict one-to-one reserve requirements. This is the clarity the space has needed. The EU's MiCA regulation is now live, and Singapore and Hong Kong are setting high standards for reserve quality. This infrastructure isn't just here to stay, it's going mainstream. Next up is tokenization, one of the most groundbreaking areas of digital finance. In short, real-world assets are going digital and it's happening fast. The market cap for tokenized assets exploded from $5 billion in 2022 to $24.5 billion by June 2025, showing an impressive 380% cumulative growth. We are seeing real-world assets like private credit, US treasuries, and even real estate being tokenized. Just look at US treasuries. They've gone from $100 million to $7.5 billion. That's a 7,400% growth. This market is projected to hit $18.9 trillion by 2033 with a 53% annual growth rate. Major players like BlackRock's Biddle Fund and other banks are diving in, and regulatory frameworks in the EU, Switzerland, Singapore, and Hong Kong are paving the way. Now, let's talk about crypto exchanges. These are the platforms that connect us to the world of digital assets. There are currently 750 million verified crypto users worldwide, and that number is projected to hit 1 billion by 2030. The crypto exchange market is worth $63 billion in 2025 and will nearly triple to $186 billion by 2030. In 2024 alone, trading volumes hit $18.8 trillion, and we are already halfway through 2025 and we've hit $9.4 trillion. Adoption is happening fast. Staking has become core infrastructure in the digital asset world. Right now, 42% of all crypto holders are staking their assets. The proof of stake market cap has surpassed $800 billion, with Ethereum alone seeing 35.7 million ETH staked, amounting to $130 billion. And here's the kicker. The SEC clarified in May 2025 that staking is not a security, which is huge for regulatory certainty. But it doesn't stop there. Decentralized finance is blowing up. 312 million active users across 88 countries with $47.4 billion in active loans and $140 billion in total value locked. DeFi is becoming systemically important. Governments and regulators are getting on board. The US SEC has launched Project Crypto to develop tailored on-chain rules, and other regions like Japan, Singapore, and Hong Kong are setting solid frameworks. But here's the harsh reality. The risks in digital assets are very real, namely AML finance risk. The report flags that digital assets are increasingly used in money laundering, terrorist financing, and other illicit uses. The second risk is the privacy and security risk. The report highlights threats from cyber attacks, private key compromises, protocol vulnerabilities, and weak custody models, and key areas to look and requires serious attention. Importantly, liquidity and market stability risk. It mentions that digital asset markets remain volatile, links to traditional finance are increasing, which raises concerns for financial stability. In 2024, $5.1 billion was paid in penalties for AML KYC violations, a 39% increase from the year before. And just in the first half of 2025, $2.1 billion was stolen in hacks. The biggest hack ever? $1.5 billion from Bybit due to an API exploit. 43.8% of stolen funds came from private key compromises, which highlights the importance of security. We're also seeing breaches like the 69,000 Coinbase users' records being leaked and 18 million exchange user records found on the dark web. The message is clear. Proper custody and security practices are absolutely non-negotiable. But the future of digital assets? It's being built right now with cutting-edge technologies. Zero-knowledge proofs are revolutionizing privacy and compliance, and quantum-resistant cryptography is already in development to stay ahead of the future risks posed by quantum computing. AI is being deployed for risk detection, as seen with BIS Innovation Hub and Kraken's M&A due diligence. Interoperability between blockchains is becoming a reality, with projects like Layer 0 and Chainlink's CCIP enabling seamless communication across chains. And multi-party computation is becoming the standard for custody, eliminating single points of failure. This is not science fiction. It's happening now. Here's the bottom line, folks. Stablecoins are processing trillions. Tokenization is set to hit $18.9 trillion, and 1 billion crypto users are on the horizon. The regulatory environment is finally clear, and next-gen technology is ready to make blockchain institutional grade. This is no longer the Wild West. This is the evolution of global finance, and it's happening fast. So what's your take? Which area excites you the most? Stablecoins, tokenization, or DeFi? Do tell us in the comment. I'll leave the full report link in the first comment below. Check it out and get all the insights. Don't forget to like, subscribe, and comment. I'll see you into our next video. Until then, bye-bye.